In this video, we'll be taking a look at chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning trade first or professional, check out our complete Forex trading course on Udemy. It's going to help you navigate the world of Forex and help you become a profitable trader. It's going to be a quick video because we'll be talking about gold, crude oil, and GBP-USD. No, there isn't much trade opportunities this week. So starting with the gold chart on the 1 hour time frame, I think this is going to be the biggest trade of the week for me, in my opinion. And what you can see is a continuation of our bullish trend. So I'm just going to do a quick recap. So for a few months, we consolidated within a symmetrical triangle, and about a month ago, we had a nice solid breakout from that symmetrical triangle, and it's been bullish all the way through to current price levels. Now, if you take a look at what we have over here, just going to zoom out a little, you'll notice that we have the 200 EMA and SMA on my screen, which acts as our streamlined area of support tracking the bullish trend on gold. And if I remove this area of value, you'll notice that we had a very nice clean bounce off of these moving averages. So one bounce here, we attempted to close below but didn't. We had another bounce here. So multiple bounces here, creating some sort of lows for a U-turn, a continuation of the bullish trend. And I have some positions stacked around this area of value and another position stacked when we took out this trend line. So right now, I'm going to ride my gold positions till we go as high as at least 1,000 pips from current price levels. And 1,000 pips from current price levels will put us at around, let's say, $3,780 per ounce of gold, which would be a decent profit in my opinion. So for those who aren't in yet, I'm just going to, revert this. So for those who aren't in yet, here's what I'll be watching out for to go long. So you should watch out for maybe a pop up into this area of resistance, consolidate a little, followed by a good breakout. So when we get a breakout, then you could possibly place your position after breakout with your stop loss placed underneath the consolidation list of the breakout, right? So what I mean by area of value would be this area of resistance. So if we do respect this area of resistance when price gets here, then you could use this as a guide to pick a trade entry when we get there. So something like this. So I'm just going to adjust this nicely. So something like this, maybe a move into this area of value. If we do get a reversal, that would be nice. Then you can look for this opportunity to go long like this. So if this happens, your entry wants to be placed after the breakout of the consolidation, stop loss underneath the consolidation list of the breakout, and you can trade your position as you go higher, aiming for 500 to 1,000 pips as the case may be, right? Because if you take a look at past price action, whenever we get a big breakout from a huge consolidation like we just did over here, on the 1 hour time frame, when we get a first bounce on the 1 hour time frame, hitting the moving averages, there is a very good tendency that we tend to see some bullish rally to the upside. So I think next week is going to be a good week for gold. Seeing those massive rallies to the upside, and I hope I do get my 1,000 pips out of this trade, and that'll be a decent return on our risk. So that's it briefly for gold. Now I don't see any reason why you want to go short or go short or be bearish. So the only reason why you probably become bearish would be if we do get a rejection, a reversal back into this moving average, get a small consolidation and break out below, then you could equally turn bearish. This area of value, in my opinion, would become irrelevant, and the moving averages may have crept up all the way to this place, and this one all the way to the place. So if we get something like this followed by a breakout closing below the 200 EMA and SMA on the 1 hour time frame, then I think you've got a good case to go short. Stop loss placed above the consolidation within the moving average, and you can trade your positions to go lower. So first tip target could be as low as this area of value or as low as this area of value over here. So this is how I'm going to trade gold, but for now I don't see any reason why gold wants to be bearish, especially when we just had the first rate cuts among series of upcoming rate cuts. So I think this is good for gold, and I think we are going to rally upwards a little, right? At least all the way to $3,800 per ounce of gold before we see some substantial pullbacks on gold. So for now, trade safe, use good risk management, wait for perfect positions, perfect entries before you take those trades, right? So for now, I have some entries loaded up around these price levels and another one over here. So I'm looking to take one more position. So if we do get that consolidation followed by a good breakout or a confirmation of more bullish momentum above this area of resistance, then I'm going to put in one more position, a small one, of course, and ride my positions as we aim for 1,000 pips price movement. That's briefly for gold. Moving on, talking about crude oil. So crude oil, real quick, still in the bearish trend. So we had that good breakout here, good consolidation over here, attempted breakout, but we got a bounce off of this lows. So I'm just going to put a line here. So we have a good area of support now over here, and following up the small consolidation we had here. So over here, we have had a good breakout, and I think price is going all the way as low as this lows. So I think we're going all the way down to these price levels, and eventually we may see these lows, right? So it's all about picking your positions and going short. So I have some positions here when we break out, but I closed them because I wasn't sure if we're going to go down. So what I'm watching out for right now would be a move into this area of support, consolidation or a bounce, followed by a good breakout from this area of value. So if this happens, then I would go short over here when we break out below this area of support. Stop loss will be placed above the consolidation, this is a breakout, and take profit target. First one would be placed around this area of value over here, and second one, if we do take out this area of support, would be placed around here, right? So this I'm going to trade crude oil right now. So I don't want to jump in a set trade opportunity, set trade right now until I am sure that we're indeed going to go lower than these lows, right? So if we do get a pullback, so for example, we may get a pullback right into this area value followed by a move to downside. Gold, crude oil can be like this sometimes. Then I'm going to look for entries around these highs with my stop loss placed above these highs, right? So this is going to be a good trade opportunity in my opinion if we do get a maybe flash bounce before the dump, right? So something to watch out for if you're going to trade crude oil. For now, I don't see any reason why you want to be bullish, why you want to go long. It's all about going short right now because the trend, the chart pattern all screams bearish, right? Screams dump. So you look for opportunities to go short, and that could be the one we discussed earlier, waiting for a consolidation area of support before we go short, or waiting or watching for a flash bounce and picking up a position around these highs with stop loss above these highs, and that should give us a good risk to reward ratio with our trade positions as the price action evolves. Lastly, we're talking about GBP-USD. So GBP-USD, we've been following this chart for some time. We had a good area of resistance over here, and I went long when we took out area of resistance. Just going to zoom in a little. But that long was short-lived after interest rates was, cut last week, and followed by some really heavy, fundamentals from the UK. So, right, that's what led to the rejection, continuous price decline. Also, following the, immediate pump on the DXY. So that's what led to this massive dump here on gold. So right now, I want to see what happens if we do come into this area value. So I'm watching out for this area value. If we come into this area value, possibly maybe hitting this trend line, I'm going to look for opportunities to go long over here for a move to the upside, going back to the higher bounds of this chart pattern. So this seems like a symmetrical triangle. So if you take this low, so 1, 2, 2 lows. So now this becomes a second high. So 1, 2, 1, 2. So there's a good chance we hit for a third bounce and get to the higher bounds of the pattern. And if we get here, then we'll be look for opportunities to go long. So something like this, bam. So if this happens, so for now, I'm going to watch out for a bounce into this area value or a bounce from this trend line. If we get that, then I'm going to go long without thinking twice. Small positions, of course, and I'm going to build my positions as we go higher, right? So as price continues to climb higher, if it does, I'm going to build positions as we go higher. Hopefully, we get a consolidation around this area of value and a proper breakout, and then we're going to open more positions when we take out this area of value. So this is how I'm going to trade gold. GBP-USD. Exactly what I'm watching out for. So I would have taken this out to make the chart look cleaner, but this looks like a very important area of value where I am expecting to see those bounces. So a good bounce of this area of value or this trend line will give me an opportunity to go short. To go long, excuse me. So if we get a bounce, I'm going to go long after the bounce. Stop loss will be placed underneath the trend line on the bounce, which means the price moving to my stop loss would invalidate my setup which will give me a tighter risk to reward ratio, right? So if you take a look at this will give me approximately a stop loss of approximately 70 pips, take profit target of approximately 270 pips. So a risk to reward ratio of 1 to 3, 1 to 4, which is decent in my opinion. I'm going to take that with small positions and build my positions to go higher, aiming for a retest of this resistance level, right? The higher bounds of the pattern. That's it briefly for this week's analysis. If you agree with me, please leave your thoughts in the comment section down below. If you disagree with me, also leave your thoughts in the comment section down below, explaining why. Maybe I can pick a thing or two from you. If you're not part of our Discord community yet, use the link in the description below to join. And lastly, if you're interested in learning to trade Forex like professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. That's it from me, guys, this week. See you next week.